thank you all for joining us today on Hot Topics in Real Estate. I am Rob Wachter with the Wachter Group at JPAR Carolina Living. And joining me today is Kasey Hart, one of our team agents. And today we are going to talk about understanding credit, specifically some of the secrets credit bureaus don't want you to know and the myths that, that pervade around your credit. Now, originally, and you may have seen in the ad, we were going to have a special guest tonight, Ron Lambright of Hope USA. And unfortunately, due to a last minute situation, Ron is unavailable to join us. So he has asked me to go ahead and make the presentation. And we are going to talk as much as we can about credit and the credit issues. And I'm going to tell you a little bit about Hope USA and just how it can help you if you are having some credit challenges. And we encourage you to drop your questions or your comments in the comments of this video that you're watching, whether you're watching it live or whether you're watching it on a recording. And if it is a general question, we'll do our best to answer it tonight. If it is something specific that we would need Ron to weigh in on, we will make sure that he gets that question and that we get you that answer as quickly as we can. So. Again, I'm Rob Wachter. For those of you that are just tuning in for the first time, I am the team leader with the Wachter Group, and JPAR Carolina Living is our real estate firm. I am president of the Wachter Group, and I have been in real estate licensed since 2004. One of the things that I do is I hold a designation of seniors real estate specialist. So as, in addition to helping first-time buyers and new homeowners, we also work with senior citizens. And one of the things that I do is I host a monthly show called Senior Living Options in Charlotte. So tune into that. It's the second Tuesday of each month, and it's also available on our Facebook and YouTube pages. So we're going to move forward a little bit and just kind of talk about today's topics. We're going to talk a little bit about why credit is important. We're going to talk about what Hope USA is. We're going to talk about some credit myths and truths, and we're going to talk about tuning up your credit. And just exactly different ways that you can do that. So starting with why credit is important, that's probably the simple topic to talk about, because if you want to buy something and you don't have cash, the option is to use credit. Using credit can be very advantageous. It can help you leverage your income to buy something that you couldn't afford out of your monthly payment, or it can just make cash flow easier. But the big thing, of course, that we will talk about is buying a house. House is your biggest asset, and for most people, it will be the biggest investment that they ever make. And in today's world, for what you are paying in rent, you can begin really building wealth in your life by buying real estate. And that's one of the things we want to help people facilitate that they do. So we're going to talk for a few minutes about credit myths. Kasey, will you help me walk through this?
Absolutely. I love busting some myths.
Sounds great. So remember, it's important to know where you stand, especially with something as important as your credit score. We want to talk about, do you know how to improve that score? That's what a lot of people get stuck. They say, I've had some issues. I've had a medical bill. I've missed a payment, and now I don't know what to do, and things seem to spiral. They can really turn into a snowball that rolls downhill. We want to help prevent that for you. Following bad advice can actually make things worse, even sometimes when that advice seems very well-meaning. So one of the things we're going to try to do is help dispel some of those myths so that you're not taking the wrong advice. So we're going to review now some of the most common and costly myths about credit.
All right. So myth number one is I only have one credit score. There's just one attached to my name, and it's good for a year, and it resets every year. Is that true?
That's a great question, Kasey. And, a lot of people, especially with some of these apps like Credit Karma, you'll hear people running around with this number, and I have this score. When in fact, there are 3 credit bureau reporting agencies, Equifax, TransUnion, and Experian. And each one of those can have a very different score. Some credit companies, some banks and credit cards may only report to one of these agencies, maybe 2. So if you are applying for a quick loan or a credit card, you may get approved for a company that only looks at one. But when it comes time to get a mortgage, mortgage companies will look at all three of those scores. And they are going to look and basically drive your approval off of the middle score. There are some more particulars about that, but essentially, for lack of a better way to put it, they try to throw out the high, throw out the low. They'll look at the middle score to determine what your credit worthiness is. Now, please talk to a lender about specifics or a credit bureau agency because every lender is going to be slightly different with that.
Awesome. Okay, so this one's a big one, and I get this one all the time. I shouldn't check my credit because it will lower my score every time I look.
Great, and that's a really important question for people to know, because it is really important to know what your credit score is so you can plan. And the reality of it is you can check your credit through one of the credit reporting agencies directly, and it will not affect your score at all. That would be what's considered a soft pull. You may have heard the term soft inquiry and hard inquiry. Soft inquiry is when you look at your score, or someone that you already have credit with looks at your score. Because if you have a Bank of America credit card, Bank of America can check your credit anytime they want to make sure you're still creditworthy. That never affects your score. Your score is affected by inquiries of requests for new credit. And the reason that is people that want to lend to you want to know if you're suddenly applying for credit all over town, is something happened? Are you suddenly in need of credit, which could make you a higher risk than others? So great question.
I have a question about that. Is that okay?
Absolutely.
So do you know when you go to the car dealership or the lenders, for their initial pre-approval, are they doing a hard or a soft?
That's a great question. Typically, credit car dealers and companies like that will do a hard pull, but they'll do a pull through what's called a syndicated agency, so that they will look at 5, 6, 7, 8 different lenders with essentially one credit bureau request. The other thing to remember is if you are applying for the same type of credit and you have multiple pulls over a short period of time, the bureaus will only count them once. Most credit bureaus understand that, hey, if you're car shopping this weekend and 3 different car dealerships pull your credit, you're car shopping. If you are, mortgage shopping and over a week or so's period of time, 3 different mortgage lenders may pull your credit, you're house shopping. But if you're getting a new cell phone, new furniture from Best Buy, a mortgage, a car, a bank loan all at the same time, that's when it becomes troublesome.
Do you know how long that window is? Like if someone is shopping around for a mortgage, is there a certain amount of days that they get where it's not constantly pulling?
Right. It should be about a 30-day period for mortgage inquiries. Awesome. I encourage you, if you're watching this, that is something that I'm taking out of memory, and I encourage you to talk to your lender that's pulling your credit before you take that as gospel.
Awesome. The third myth is closing unused accounts lowers my available credit and is good for my credit score.
Well, you would think that would be true, right? Because if you have a bunch of credit accounts and you're not using them, why wouldn't it make more sense to reduce that? But in actuality, it's the opposite. One of the things that affects your credit score is called credit utilization. So the question there is, how much credit do you use compared to how much credit you have? So when you think about that, if you have $10,000 in available credit card debt, and you only have a $500 balance, that means you have the ability to borrow $9,500 and you haven't. That means your financial situation is strong. But if you only have $1,000 worth of available credit, even though you only are using $800 of it, your utilization is very high, and it makes a lender think that you may have financial trouble. So the best situation is to maintain the accounts open and just use them with a zero balance. Closing those accounts erases that credit history as well. And that positive, if it is a positive credit history, will no longer be factored into the score in your payment history.
Do you know if that is applicable if the company, say I have a credit card with a company and I haven't used it, so they close it, does it still affect your credit in that way?
Yes. In fact, the important net result is you will have less available credit. So it won't count against you in the respect that the company didn't close the account because you were performing badly. So it won't affect you that way, but it will affect you in the amount of available credit you have, because it will just change the math on that ratio.
I gotcha.
All right.
Okay. Myth number 4, paying cash and carrying no debt will help raise my credit score.
Again, you would think that would make sense, wouldn't you? The less debt you have, the more you use cash, the more financially strong you are. And that may be true. You financially may be stronger. However, without having a history and a record of being able to responsibly use credit agencies and lenders don't have any ability to evaluate whether you can handle the debt. So having no credit history or never using it definitely doesn't help your score. FICO reports, which is a score that I believe Experian uses, reports that people with no credit cards are at higher risk than people who have credit cards and use them responsibly. So paying accounts on time, now that benefits your credit score.
Okay. This one is my favorite. All debt is created equal.
Okay, that is definitely not true. Various types of debt impact your score differently. In fact, a fairly healthy portion of your score is related to just what that mix is. And people say, why? Well, think of it this way. If you have one house rather, and 10 credit cards, do you think that you're probably at a little bit more financial risk than someone that might only have 3 credit cards? Yes. If you have 5 car loans, that might be for the bank, whoever's trying to lend you money. Why is this person financing so many cars? So the balance of the types of credit is actually really important to your credit score. Revolving accounts are very valuable. They're credit cards, lines of credit. But the more of them you have, the more exposed you are to suddenly owing money tomorrow that you might not owe today if something comes up.
I have a question.
Absolutely.
Do you know if someone takes out a line of credit on their house, do you know if that is impacting more than if they just took it out on a credit card? Like, do you know how that stacks against good versus bad credit? If you get what I'm saying.
Great question. And there really isn't good versus bad credit so much as there's different types of credit. So that would be kind of in the middle. It is revolving credit, but it is also secured against your residence. So it's actually kind of counted in between. The reality of it is the more available revolving credit you have that you're not using, the better. Where people run into that problem is if they get a home equity line of credit and they max out the balance. Frankly, if you're going to max out the balance of that, because it's got a variable interest rate, you're probably better off refinancing the entire mortgage, or perhaps just getting a home equity loan and creating a fixed term payments on that.
Awesome. Okay. Thank you. Paying my credit cards off every month hurts my credit score. It's better to leave a balance. And I just want to say, I've had multiple debates about this, so I'm very excited to see what you're about to say.
Okay, great. And the reality is, this has changed over the years, because that used to absolutely be true. And in the 90s, I used to counsel people on exactly how much to carry on their credit card month to month. But fortunately, the credit bureaus seem to have, improved a little bit. So keeping zero balances or 1% balance or less can really give a big boost to your credit score. Paying your bill early can help your credit score. And this small tip can really pay big dividends in the years to come, because at this point you can get better interest rates on credit cards. A lot of different things can be less costly to you with a better credit score. I've seen people walk into places like CarMax and get quoted for the same car. One person gets quoted 1.5% interest, and the next person gets quoted 12% interest. That's thousands of dollars added to the cost of a car.
I gotcha.
Mm-hmm.
Okay. Myth 7, if my debt is less than 30% of my income, it will have a positive impact on my credit score.
Now, this is something where I understand why people may think this, but they're mixing two things together. Your debt ratio, which is owing your payments being 30% of your income or less, is lenders like that because of your availability to be able to afford the debt. However, the credit bureaus do not know what your income is. Your personal income has zero impact on your credit score, at least directly. Of course, it will have an impact on your credit score if you get upside down and you have more payments than you can afford and you miss payments. That will absolutely affect your credit score. But the credit bureaus don't get that information. It's none of their business, and they don't track that.
Okay, so you're saying that it's when you're looking at credit, they're just taking in how much credit you have available to how much you're using. Income there's nothing to do with income.
Correct.
Okay.
That's very well put.
Okay, awesome. Myth 8, incorrect personal information hurts my credit score.
And this is actually new to me recently. But your personal information, and we say that, we mean your address, your employer, your phone number, no impact on your credit score. Now, clearly, there's some reasons why you want correct information there, but your score is not one of them. Factors such as income, employment history, and of course, the big ones like race, religion, marital status, age, do not affect your credit score. In fact, the majority of that last list cannot affect your credit score, or that would be a fair credit violation of the bank.
Awesome. Okay. Once a collection account is settled, derogatory information will be removed from my credit report.
And that's something that I hear a lot and is a very common misconception. People think, well, I've owed this medical bill, or I've had this credit card that's late. I'm going to go ahead and pay it off. So that will fix that, right? Then that will go away. And the reality is the record of the fact that that happened remains on your credit record for up to 7 years. All right. There are ways to have those things removed or adjusted, especially if they're not accurate. And that is where a professional debt negotiator can really benefit you. If you're working with a professional debt negotiator, which Hope USA has got them, they can sometimes on the front end negotiate the way things are reported and how a settlement is dealt with. The key is once that settlement has happened, you lose that ability to change and make that negotiation. So I encourage you, if you are trying to repair your credit, and there are a lot of cheap scam agencies out there, do this for free and give me access to this and we'll repair your credit. And a lot of times they are just shuffling things around, taking money and making it worse for you in the end. Hope members can receive negotiation assistance as a member benefit, and we'll talk a little bit about more about that by the end.
I have a spur of the moment myth for you that I just thought of that goes in with this. Is it true that medical debt does not hit your credit? So if you have an unpaid medical bill, I'm only asking because this has come up between me and my friends when we're talking, and I've heard both sides. Some say it doesn't. Medical bills don't affect your credit. Some say it does. So I just didn't know if you knew that answer.
I am going to suggest that we actually defer that question to Ron, or we can certainly get that answer and post it in the remarks later. My understanding from being a lender is medical collections certainly do show up on people's credit reports. And when they do, they absolutely affect that person's score and their credit worthiness. Now, when and how a medical collection shows up on someone's credit varies. And I believe that because of some of the COVID-related benefits that have passed, I think there have been some extensions and some special programs available, but I don't know the specifics. So we will research that. And if somebody is interested in that specific question, just put a comment in the comments and we'll make sure we get you the specific answer. But thanks, Kate. It's a really good question. All right, we're coming to the end here.
Last one. One missed payment won't hurt my credit score.
And as you can guess, there's a little bit of a pattern to what we're doing. That is not true. In fact, payment history is one of the very biggest factors in making up your credit score. Late payments can cause a huge and sudden drop in your credit score, and they can stay there with you for as long as 24 months or more. Now, as with anything else, the key is what percentage of your credit utilization is affected by that. If you have 5, 6, 7, 8, 9 loans and one slips through one time, will it affect you? Yes. Will it affect you catastrophically? It depends on each lender. Will get to make that decision for themselves. If you have 1 or 2 credit accounts and you have one payment, that will certainly impact you with a greater magnitude because a larger percentage of your accounts are delinquent. So one of the things I strongly suggest to people is if you have a bill pay setting or if you do have online banking, set up some sort of an automatic payment, even if it's for just the minimum payment on every account every month. And you may intend to pay more, and we hope that you do. But if that automatic payment goes and gets at least the minimum due, even if it's something rolls over and you have to pay some interest, it won't have a negative effect on your credit score.
Awesome.
Kasey, thanks for bringing that up. Now, let's talk a little bit about Hope USA and what Hope is. And I've known Ron Lambright for a number of years. And what I know about Ron is he was in the mortgage industry for a number of years and really ended up with a heart for people that were having challenges getting credit, especially people that were having trouble buying a home. In fact, HOPE stands for Home Ownership Program for Everyone. And what HOPE is designed to do is help promote home ownership with people that are challenged or struggling with their credit. If you want higher credit scores, if you have been turned down for a loan, if you have collection accounts, if you've made late payments within the last 2 years, HOPE may be able to help you. If you have major credit issues, they can absolutely help you organize things. If your answer is yes to any of those questions, we really encourage you to reach out to Hope USA and talk to them about how they might be able to help. Now, one of the questions we often get is, how does it work? They will look at challenging negative things on your credit when appropriate and legal. Really big thing, this is important, is assisting in negotiations if you have that. And I encourage you, if you are struggling with an outstanding debt right now, or you're thinking about paying something off, it's really worth getting some counseling on that because you really can put yourself in a world of hurt. And sometimes you can be using the money in the wrong direction so that money used somewhere else could have had a much bigger impact. And of course, they can help you with current credit to help establish healthy accounts and balances. What does HOPE cost? For an initial consultation, it's really inexpensive. It's $30 for an individual or $40 for a couple. Some people say, well, what about all these places with free consultations? What I'll tell you is you get what you pay for. And it costs money to review your credit right off the bat. So legitimate agencies are going to, they need to make money and they need to do it without being on your back. And the companies that tend to do this for free they're getting their money from somewhere. So you always want to find out where that money is actually coming from. So if you decide that this program is for you, it's $199 to join and $99 a month. And one of the questions I'm often asked is, well, how long do you have to be in the program? And of course, one of my favorite answers is, I'm sure it depends. And it will depend on how much work you have to do and how much time that's going to take. Again, what I suggest people consider when looking at this is, a 3 or 4% difference in interest rate on an automobile, or, God forbid, the amount of money that you might lose in the real estate market by the delay in buying a house. Kasey, what have you seen for home prices, in the last year? You work with a lot of buyers and you do a fantastic job at that. What trend are you seeing with home prices?
Right. I mean, they're on the rise. There's no, there's no way around it. prices are going up. Right now the market it's very competitive. So I don't foresee that the prices are going to come down anytime soon, if at all.
Yeah, so the way I look at it is, let's just say that you spent even $1,000 on credit repair, and you did it the right way, and you were able to buy a house instead of waiting a year, 2, 3 years, where prices might go up $20, $30, $50,000. And by the way, if interest rates happen to go up, which I'm sure they probably will at some point, that monthly payment difference can be hundreds of dollars a month for that same house. So, I really encourage people to consider the long-term impact of healthy credit to their financial situation.
We had a question come in real quick.
Mm-hmm.
So just to clarify, can Hope help deal or get rid of collections that may be on someone's credit? Is that what you mean by negotiating?
And that is a great question. And that is a question that I am going to suggest that you ask Hope directly. In fact, what their goals are in Hope membership is to get personalized professional guidance to help you save money, help you achieve your goals more quickly. And if you're interested, we really encourage you to contact a Hope person. There's a phone number right there. In fact, here's the phone number, or you can email Ron, who was unable to be with us tonight. And there is his email address, because I don't want to speak to the very specifics of the program. And I'm sure the answer to that will vary depending on what the type of collection is. I mean, the one thing I can answer, I know for sure, is if there is an erroneous report on your credit, then yes, a good credit counseling or advisor agency like Hope USA can absolutely help correct your record. Beyond that, I would want you to talk to them specifically.
And if someone is out of state, they can still contact Ron, even though he's in North Carolina. This isn't just for North Carolina, correct?
That is a great question. I believe that this is not specifically North Carolina, but that is a question to direct to Hope. And guys, I'm really sorry that I don't have every one of these answers tonight. Ron is a little bit under the weather at the last minute and had asked me to step in, and I'm sure he'll be more than happy to answer those questions. Or again, there's a whole staff of people at that phone number there at Hope. It's not just one person.
Awesome.
All right.
Sorry, we had one more question come in.
Oh, thank you.
Going back to the hard pull, soft pull, do you know how many points on average for, let's just say, a mortgage, the hard pull affects it? I feel like a lot of people think the hard pull is, 10, 15, 20 points. Is that the case?
I don't know that specifically. So I am going to say that we will follow up with you and get the answer to that. And we will post it in the comments on this video on Facebook. If this question is from someone that's not on Facebook, it's from another channel, we'll get that answer to you directly. My understanding is a single hard pull is a fairly minimal number. And what's coming in my head is 15 points or less. But I would want to get the firm answer to that before I give it to somebody. Awesome.
Thank you.
Mm-hmm. Well, we certainly appreciate your joining us tonight. We hope this was helpful. We do a show like this every month, if not more often, called Hot Topics in Real Estate. We're going to be having another show next month, and the topic has not yet been announced. So keep an eye on our Facebook page, and you will get you'll see those events posted. You can follow us on Facebook in order to make sure that you get notified of those things. Or of course, feel free to call us or contact Kasey or myself directly, and we'll put you on our mailing list. Again, if you think of any additional questions, even after this broadcast is over, or if you're watching this on a recording, just shoot us the question in the comment, and we will get that answer for you. Thank you so much for joining us today. We hope you have a great night, and we look forward to seeing you next month.